The reason, in my view, why the dollar has appreciated, not just because of the rise in U.S. rates, has been some of the worries in China have been less about incremental growth shifts and more about, a little bit more of a deeper worry. I think that confidence is coming back, and so the bit of dollar strength we might see going forward is a little bit more about rate differentials, and there is some carry in EM, so I'm not too worried about it. The type of dollar strength, if you think about the dollar smile, if you go towards the left-hand side, would be much more about a deeper growth slowdown in China. I think we're not there yet, frankly.
So, Sarah, what did you make of what we heard from Commerce Secretary Raimondo? US businesses told her that China's uninvestable. I would suspect that they are referring to longer-term capital, but does that include portfolio inflows, and are you inclined to agree, given where China is in the cycle?
I would be very comfortable saying there is opportunity in China. And I think Chinese equity products have always or very often been focused on very wide dispersion, sectoral differences, and finding the opportunity therein. But you need to know the bottom-up stories and have people on the ground. And that's effectively, I find, where most clients' minds have moved towards. I think regarding people's comments and views on the Chinese economy, certainly we've been through a period of slowdown and disappointment in terms of the follow-through on the consumption side, and a number of EM companies and global companies that have revenues onshore are citing, a slowdown. That certainly can persist, for some time, and we've actually recommended, going underweight a number of those stocks and sensitivities. But again, I think that's a very different story than this idea that there's not opportunity in China. I would disagree with that.